Well, the next evolution of Asia-Pac Payments panel is up shortly, and I'd like to thank the session sponsor, Essentia. Now, this panel will explore the evolution of Asia-Pacific payments with a particular focus on next-generation developments and how these are being developed and used. The facilitator for this is Ryan McQueen, Managing Director of Payments Lead Essentia Australia and New Zealand. Ryan joined Essentia in January 2022 to lead the payments capability across industry capability that will grow in coming months with considerable upcoming demand and need in the market. Ryan has extensive experience in banking, financial services and payments technology. Give him a big round of applause, please. Let's turn to our panelists now. The first is Camilla Bullock, CEO and co-founder of Emerging Payments Association Asia, EPA. Camilla's role is to bring together the different participants in the value chain of payments for collaboration across Asia-Pacific. Camilla has a long career in the financial technology industry, starting in London in the early 2000s, working for Reuters today. Give her a big round of applause and welcome to the stage, please. Next up, we have James Brown, Chief Revenue Officer of Qippay. James is an industry leader focused on driving new innovation to deliver better customer outcomes. He is a business connector focused on helping New Zealand build innovative technology products and solutions. Welcome to the stage, James. And finally, Oriana Tessari, the Head of Product Partnerships, Australia and New Zealand, Stripe. Oriana is an experienced payments and fintech specialist with more than a decade of international banking experience. In her role at Stripe, she oversees product partnerships for the ANZ region. And can we welcome her to the stage, please? And now I'll leave it in the very capable hands of Ryan, our facilitator for this panel. Thank you, Ryan.
Thank you very much, and thank you everyone for having us here. I think the context of the discussion really stems from when you were last here 4 years ago, right, to today, and then we're going to look ahead, probably 3, 4, 5, even 10 years. And I'm with a great selection of panelists, all from different areas. I'd just like to give them a chance to introduce who they are and what they do from a contextual perspective, so I understand where they're coming from.
So hello everyone, and thank you Payments NZ for having me today. And so I lead Emerging Payments Association Asia. So we are a branch organization for participants in the payments industry. So Happy Swift and CBA are, for example, 2 of our members. And we bring the participants in the full value chain together to make sense of what's going on in the industry and to speak with one unified voice towards the regulators in the region, representing the region. And we cover topics all from cross-border payments, all the way to open data, and touching on a lot of those thought leaderships, what's happening in embedded payments, or around the crypto and CBDC space.
Jim?
Well, for those that know me, you've got to do the obligatory selfie. Smile, everybody. Thank you. My name's James Brown. I work for Qippay. I'm the Chief Revenue Officer there. And there's been a lot of great conversation this morning, but I'll just start by saying that our solutions save lives. That's it. No, I'm only joking. But what do I mean by that? I mean, we're a small nation. We all know that. We're a small nation of many businesses, and everybody's feeling the pinch right now. There's no doubt about it, including everybody in this room. But one thing I suppose we haven't also considered is the mental health and stress that's actually put on small businesses through bad cash flow, real-time payments not actually happening, and actually really high merchant fees. So we've actually created solutions that actually do away with all of that. Real-time payments through bilateral agreements with the banks, thanks Jody, and also actually being able to do things like recurring payments and actually take some of that raw data and actually give it back to the business and they can make better informed decisions. Sorry, frog. Thank you.
Thanks. Oriana?
Hi everyone. So Oriana Tessari from Stripe. Stripe is a financial infrastructure company, and we help businesses of all sizes to accept payments and grow and expand both domestically and globally. So when I'm talking today, I'll be coming at it from predominantly an e-commerce context. That's where our strength has historically really been.
Excellent. Thanks so much. And like I said, great to have you here with us today.
Thank you.
We want to cover a couple of topics. The first one is around the emerging customer expectations across APAC. And maybe, Oriana, I'll start with you. If you think, because Stripe has covers many, many markets across APAC, what do you see in terms of their expectations, customer expectations? Where have they gone from and where are they going to? And are there any differences or similarities?
Sure. So I'll start with a stat, again in an e-commerce context. 84% of customers tell us that they will frequently abandon an online shopping cart if their payment method of choice is not available. So that's a consistent customer expectation across APAC, whether it's cards, wallets, installment payments. Customers, when they're shopping online or when they're making payments online, they want to be able to pay in an easy and convenient way for them. What is unique is that in each of the markets within APAC, there can be great differences between customer preferences around these payment methods and the actual payment methods themselves. So in many markets, which many of you will know, there are local payment methods that are really prevalent, and there are new ones emerging all the time, so customer preferences are evolving. So it's really important that when you're serving a global client base, you're really looking to meet that customer expectation and provide that payment method of choice. Customers also tell us across APAC, or 60% of them tell us that they're more likely to make a payment online via their mobile versus their desktop or their laptop. And that varies from market to market as well. So in New Zealand, it's 45%, and then it's up to 70% in Singapore. But if you're a business doing business in those countries, then you really want to think about how much resource you're dedicating to optimizing the mobile experience and potentially look at more frictionless options like one-click checkout, so Google Pay, WeChat Pay, Alipay, etc. But ultimately, customers want a seamless, optimized experience, and they want simple and convenient ways to pay. But what that looks like in each individual market can be quite different.
And Camilla, any thoughts on that?
So I think that customers in general, wherever they are in the globe, it wants the provider to know them, and they want to transact in a channel that they trust. But that looks very different depending on where you are and what background you have. So we hosted a workshop in Singapore recently on alternative payments. There was lots of discussion around real-time payments and the wallets and the QR codes and a big proportion on buy now, pay later, which I'll come to in a second. But then we had the same workshop in Australia a few weeks later. Or actually, I should be, in Singapore, we were called out several times, as well as when we had this conversation in Indonesia and Philippines on why do you talk about alternative payments? That is mainstream payments, because they never went via card. While when we're having the same workshop in Australia, it was just confusion in the room because we couldn't really get to an alternative payments that doesn't have a card underlying. So I think it's very different when we compare things and how we compare innovation, because we just go back to those transactions underlying with a card or a bank account. And I still think there is not fully understanding in Australia and New Zealand how prevalent the super apps and the wallets are in Southeast Asia and Singapore and China. Because we look at WeChat, for example, so they have 1.2 billion users now, and it looks like the wallet usage in Southeast Asia, China and Singapore is going to be around 2.8 billion in 2026, so it's soon. But in that app, you actually have millions of apps in the app. And it's not that you click and you get into another app. They are there. So they are really capturing this social selling with no click through, and it's not marketing. And I think that social selling is something that will come more here in the different channels with trusts. So I think coming back to what's been said earlier today, customers has a common need of trusting who's helping them with the transaction, and that is evolving. And then my second point is I think all customers want frictionless at context, depending on where they're transacting, but it goes more and more digital, and so you're going to see more of the embedded payments emerging, but where they will emerge, that's, as using my expression, the domino bricks hasn't fallen in the Western world. Will it be a super app, or will it be some other platform that we trust and that can take the context of friction away for embedded payments?
The only thing I suppose I would add to that, I mean, you certainly look around the world at jurisdictions that have adopted technology far greater than we have in New Zealand. And, you know, without being too flamboyant, you know, it's almost taken a bit of a global pandemic for us to really put that foot on the accelerator. And that's not without its challenges. I mean, you know, if you think and consider the banks, I mean, their regulation runway is just enormous. And I think when you're actually a small fintech sort of dealing with them, you have to bear these things in mind, that they might love the product and want to embrace the product, but actually they've got a lot of other things actually going on in the background. And I think to your point as well, if you look at some of the stats across APAC, just the sort of the number of options now that people have at their disposal to pay is just continuing to grow. So if you're a business operator, you actually have to have that thought process about who's coming into my store, whether it's actually analog, face-to-face, or whether it's in the digital context of actually how they're going to transact, so that you don't come across that point where they just bail because it's just too hard.
Yeah, and that's great. I want to pick up on the element that you both mentioned around trust, right? So, and I think you'd all agree with me that the session on trust earlier today was excellent, right? You know, quickly followed by the Star Wars session, but I'm a Star Wars aficionado, so sorry, those of you who aren't. But if we think about trust and we think about what's happening in New Zealand, so we're moving to a highly accelerated, you know, change of pace. So earlier this morning, we heard about, you know, the parameters around real-time payments, open banking, consumer data right, CBDC, SBI 360, and there's probably 5 more under that. If we think about that in context of there's so much change afoot, right, and all that change afoot is going to be touching an end consumer or an end business, I just want to table it with you guys. What has your experience been in bringing new capabilities to market and new ideas to market, and being able to get through that trust framework to have actually customers believe it's a credible service and it's of high utility and so forth?
Well, I think both to Camilla and Oriana's point, it's almost what's been demanded. You know, we don't want to be stuck in a queue, you know, wasting our time. We want to just, you know, complete the transaction and go and get on. So I think organizations that are actually adopting that, and that's at the forefront of the product solution, that's where you're actually starting to see some real traction. The other thing from my point of view as well, and back in the day when I used to run Fintech NZ, and I think Jason's in here today, it's about collaboration and then co-design. So although we've got some really great fintechs and insurtechs and wealthtechs and regtechs and everything tech coming through, you've still got big multinational organizations that have got an abundance of customers, and they will be feeling the pinch. So I think what we've started to see over the last few years is that lovely synergy between bigger organizations and smaller organizations. So you no longer need to spend a few $1 billion in removing your legacy system. You just pull out that little bit of your DNA that doesn't work or doesn't deliver, and you just plug it back in. And that's when there's been quite a conversation about open banking today and in the news in the last few days, and it's been around for a long time. But the reality is that's okay for everybody in this room who understands it. Walk outside and go and ask the average person on the street what's open banking, and they won't have a clue. But equally, should they actually care?
Yeah.
And that's the question.
Oriana, where do you think we're going from a customer expectation perspective? So obviously a lot of change and a lot of geopolitical change, and we've had the pandemic and you know, high inflationary pressures, and we can go on and on. The supply chain is broken in some areas, but what do you think customers and businesses are going to look for in terms of services and products and capabilities in the next 3 to 5 years?
Yeah, well, I think if we think about the way that we've operated over the last couple of years and really the way we've responded to trends during the pandemic, I think a lot of those aspects are here to stay, and we'll continue to see those trends carry through. So things like a much broader and new demographic coming online, new sectors coming online, so edutech, online menu and ordering systems, health tech, etc. We've started to see, or we've definitely seen enterprises start to use new payments infrastructure as digital natives have been for years. And we've absolutely seen an increased appetite for global expansion as businesses look offshore for new opportunities to grow. And I think as we've opened up again post-pandemic, we've returned to a mix of bricks and mortar and online. And so that's starting to is driving demand for unification of commerce across bricks and mortar and online. So I think the expectation is definitely going to be continuing a hybrid model, so definitely not returning to pre-pandemic norms. And I think we'll hopefully carry through that some of the momentum of digital transformation and continue to look to payments and financial infrastructure as a lever for domestic and global growth.
And I know where you're going, James. I was going to say, so, and this can be, you can take this one first. So I think there are a lot of people in the audience, and we think about what the future should look like. And as soon as we start to think about what the future should look like in terms of the technology platforms behind it, and immediately I think, if not cash dollars start running through our head, maybe amount of money we have to spend on new platforms, new capabilities, and so forth, start having all these competing priorities. What are the best ways to tackle moving forward? So, like I said before, there's a lot of things, at task in New Zealand to be tackled at the same time. What are some of the best ways that you've seen these things tackled around the APAC region?
You have to let me in, otherwise I can't remember what I was going to respond on from the first one.
Go first. You're up first.
First, I have to respond on the trust that we talked about. And just one thing, and it will tie into the open data also. The first, I think, when we talk about trust, we really have to take into consideration the cost of loss of reputation, because that's what it is, and that hits with different magnitude depending on who you are in the value chain. I think that's super important when we're talking and now we're structuring specifically open data frameworks, which the conversation has been bouncing back and forwards on. And then also when we're talking, will the end consumer want to use open banking, open data? We talked about in the previous session this accelerated cost of living. And I think they might not go and say, I want to use open data or I want to own my data, but they're going to turn more and more to fintechs to help them to manage their finances over the next coming years. And hence, I think it's important that we start that journey now and start to really build products so we can see what it is. The end consumer is not going to know what they want before we start to build it.
Yeah. Do we know what we want before we start to build it?
Well, we will hope that the industry has a vision of what we want. Do we have a vision?
Open question. Anyone feel free to raise your hand and volunteer an answer. Yes, but clearly we do. Clearly we do.
But actually it comes to that. I think what we talk a lot about and what we set out to do with our members is really to collect use cases and best practices across the region to be able to paint that vision for everyone, because there are a lot of products out there, both by banks and fintechs, that are existing, but we might not know they are driven by open data.
Yeah.
I mean, I think from my point of view, it was mentioned earlier in one of the sessions, it's about getting the right people in the right room to actually make the decisions across government, regulation, and the industry. Because, there are certain situations that you've seen in open banking over the last 10 years. If you look at the UK, where some people might actually argue that the banks were sort of like pulled kicking and screaming, whereas actually as a smaller nation, shouldn't we actually have the ability just to sort of get everybody in the room and say, how are we actually going to make this work? And I think back to Camilla's point, the trust element, absolutely. So if I'm a brand new organization into market, I might have a little bit of reputation, and obviously I'll be very mindful to burn that reputation. But if I'm a large bank, I mean, that's hundreds of years. So the weight against that is quite significant. But equally, we should also consider that the regulation piece, is it actually creating more innovation, or is it actually stifling innovation? And that's a debate that will go on for a length of time. But it was mentioned in the other session this morning around the COFA, the Council of Financial Regulators. About 3 or 4, no, it was actually about 4 years ago, I got all of the regulators in a room up at the Northern Club. And literally it was just the future of financial services discussed. But the variance between their understanding of the role of technology within that, the digital adoption, open banking, I mean, some of these phrases were actually quite new to some people in that room. But we've come a long way since then. But my goodness, actually, have we got a long way to go.
Yeah. Oriana, what do you think?
I think when we're introducing new technologies to market, there's an element of customer education, and I think the ecosystem definitely plays a role in that. So if I'm just thinking of a specific example like MPP Pay 2, and what a heavy lift and what sort of dedicated planning needs to go into actually educating consumers and business on how they leverage that new capability. So I think that's a big piece as well.
That's gold, that is, education right there.
Yeah.
And I think also actually, let's just say Singapore, when you actually had everybody in a room and there were, this thing of fintech was just emerging, they sort of like, well, we should get behind this. That this looks like it's going to be a thing. If you look at that then inwardly in New Zealand, we're good at that around agriculture. We were good around that around tourism and, let's say, dairy. But when we look at technology, we're still a little bit lacking there. So I think maybe a little bit of clarity of thought combined then with the education piece is how we actually accelerate our future platform.
I echo that also, and we recently ran a webinar on the future of real-time payments for corporates. And out of all different speakers I try to get into a room, and I do this a lot, I so struggled to find a corporate treasurer or a CFO from a global company that wanted to come and speak about what they saw for payments trends within the company. They all wanted to come and listen and participate, but the terminology that I had lined up for them to speak of procure to pay and so on, they didn't want to talk about it. So it's a dissonance between our industry and the actual big corporates, specifically in that real-time payment space. Another one who killed that conversation very quickly, turned around and asked the one treasurer, so what are the benefits and what are you going to do with real-time payments? This is really exciting. I don't want real-time payments. It's the worst thing I can think of. I want to have predictability, but not real-time payments. I need to know when the money is hitting. I don't want it whenever. So absolutely echoing education, both downstream to consumers, but even more so to corporates and specifically regulators across the region to share best practice of going in one direction with a vision.
And I think just final point on that as well is that we shouldn't be afraid actually of knowing what we don't know. And that's the reality. A lot of this is new technology, and it's emerging technology, and we should embrace it. Equally, though, we should also look for the pitfalls of actually, not bringing everybody on the journey as well. And we've seen a little bit of that digital divide, unfortunately, actually widen rather than narrow. So I think we do have to take a little bit of stock and just think about that for future.
Thanks. I want to table a question here, and it's open to the panelists, but also open to yourselves and the audience. So if we think about the vision from a Payments New Zealand perspective about rebuilding its leadership in the space. So, and rebuilding, that's true. We heard about, at one point many years ago, New Zealand was a leader in the space, and then slowly things slipped away, and now it's a bit of a laggard. If we think about New Zealand's role in doing that, right? Does it need to extend across other nations, other island nations? Is it something more regional, or is it something local? Is it something that we should focus on domestically, or is it something that we should think about for our international trading corridors?
Well, let me say this. There is, as I understand it, financial services is a big contributor, and technology services, or digital rather, is a big contributor to exporting for this country. And there is a strong correlation between the speed with which a business internationalizes and its economic success. So if I think specifically about, say, Australia and New Zealand, businesses that go global tend to do so quickly. 2/3 reach offshore markets within their first year of operations. And those are the businesses that tend to see more economic success. So businesses that actually reach offshore markets within their first year of operations have around 140% more growth from a revenue perspective than their counterparts that either don't expand or take longer to expand. So I think as part of sort of leading in financial services, it's also about showing the world what that looks like. So I think expansion is a big part of that, and we should be thinking about how we support New Zealand businesses to expand globally and do so quickly.
James?
I mean, from my point of view, I mean, the technology sector for many a year now has been the fastest growing sector in this country. And if you actually sort of dive down in that a little bit deeper, actually Fintech has been the sort of the outstanding piece in that. Where I think we could leverage some of our partnerships, and if you look at the most recent free trade agreement between the UK, which is instantly recognised as obviously as a Fintech hub, maybe a little bit less so now after Brexit and some other things. But the reality is we've got strong partners. So why don't we look at the FTA that's in place? Why don't we look at the DEPA agreement with people like Singapore as well? And we actually start thinking about how do we have regulator to regulator, government to government, and industry to industry co-collaborating and co-designing on stuff. You know, if you want to call it a sandbox, and certain parts of our regulation framework don't like that word. But equally, actually, we can start to explore and exploit. We can start having two-way traffic across learnings, and someone said about best practice. We don't have an abundance of capital in this country, but other nations do. So how do we help attract them to that? We no longer need to work in the sort of the CBD because we can work more remote. So we can attract families to any part of New Zealand because it's stunning here. So there's a different way of framing this up. But equally, I think it's also the role of those different three areas of actually being able to articulate and tell our story. And Chris Barton's in the audience, he won't mind me saying this, but there's, you know, we've talked about Xero, we've talked about Pushpay, we've talked about a few others. There are lots of great success stories out there. It's how do we corral all of them together and then take that to the global stage?
So maybe a different spin on it, but I would always encourage anybody setting out now, either be regulation or building tech, to think about interoperability. That it just has to be done. You don't want to do it locally and then go and add the region afterwards. Yeah.
So what I'm also hearing is there's not just collaboration, you know, within our own shores, but it's collaboration well beyond our local shores.
So one example, for example, when we looked at open banking, we all sort of look at what happened in UK. And I know when Brazil was bringing their open banking, they looked a lot at UK, what they have done in their framework, and learned from their pitfalls. They also used the same tech providers. So they implemented open banking in about, I think it was a year, and then they did open insurance in 6 weeks. So it's just like take and replicate and learn from what's happened elsewhere.
And also, if you look at what Australia did with the CDR, I mean, they actually made that open source. Mm-hmm. So rather than maybe sort of go out to a few key people or a few key stakeholders within the industry and get some, you know, valuable insights from there, just make it open source and just get feedback from everybody. And that's how they were able to accelerate their thinking actually and come to their conclusion around the guidelines and the standards. So there are these things out there available to us if we choose as a nation to embrace them.
Excellent. And on the CDR front, I don't think there's going to be an industry spared in Australia, and that includes government. So look forward to that in a few years. Just want to jump to a different topic around inclusion. So as, you know, and we've touched on it a little bit earlier today, but as we introduce new technologies, new capabilities, and so forth, I don't want to talk about cash. I think we did that 4 or 5 times already. But how do we look at inclusion when we think about the new technologies and new capabilities that we might be introducing into markets? Who'd like that?
I'm just making sure I'm not the one just hogging the floor here.
I think Oriana.
Oriana, go ahead.
Well, I think if we're talking about, say, remote communities, as power and mobile and internet networks expand, then technology becomes a greater lever for inclusion. From the consumer side, going back just quickly to payment method of choice, that would be a big one, because for some segments of the community, they will have easier access to certain payment methods than others. From a merchant perspective, there are a couple of recent innovations or capabilities that come to mind. There's tap to pay on Android or iPhone. So if I think specifically about South Pacific, I think there's something like 6 million mobile subscribers, and contactless growth is pretty good in Pacific and PNG. And I think we're expecting 80% penetration of smartphones by 2025. So there may be pretty good dynamics for a tap-to-pay type solution where a mobile phone can be used instead of a terminal device. And then beyond remote communities, just the small to medium enterprise business segment in general, they're often constrained by resources. They possibly don't have the same skill sets within their organisation relative to other larger enterprises. So capabilities that are no-code or low-code offer a route to them to access best-in-class technology. There's a capability that exists today where a small business can stand up a payments page, copy the link and send that to their buyer, and they're basically able to accept payment within minutes without a single line of code. And that's really useful to help them overcome the cost that would be required for them to develop a website or integrate with a payment gateway.
Camilla?
So I take a different spin again out of Southeast Asia, context and inclusion, and coming back to this, what I said about buy now, pay later, how it's so different in the Australian and New Zealand market compared to if you look at probably Indonesia, Philippines, Malaysia. It's two completely different stories. Like here it is another way of credit with often an underlying card. Well, there is actually really is financial inclusion. This is the first chance that many consumers getting to have credit at all. And even just a little piece, that is the way that they can start to build the credit profile to actually being included more in banking systems. So two totally different story, even if it's the same product. And I think also real-time payments is really doing a lot for inclusion in those markets, because a lot of economies have been cash before, and you're getting this whole shadow economy into the system. So both innovation as in way of installment payments, but also real-time payments has a huge chance to get more people and small businesses into the official sector.
And the only thing I'd add is I've spoken to a number of organisations that are looking at microfinancing as an example. So someone with absolutely no history whatsoever, and just providing them that facility. Arguably they might take a bit of a sting in the tail on the odd occasion, but equally they're actually taking that decision not to exclude anybody. And I'd love to see something like that actually hit our shores.
That's excellent. And one thing I'll add, we're very lucky from an Accenture perspective, is that we work with many central banks around the world, and when we think about inclusion, I put absolutely up in lights is the European Central Bank and what they're doing from the digital euro perspective. Their premier use case is peer-to-peer transactions offline. And I'll just let that sink in. That's equivalent of cash, right? At some point in time, people not being able to connect to the internet and so forth, but that is their first use case. So when they think about the replacement of cash and inclusion, that's their first use case. Very, very interesting. Excellent. Well, we're getting flashed that we're 17 seconds over time, so I'm pretty happy with that timing. So just, if you'd please join me, thank our panelists, and thanks very much.
Thank you.
Cheers.
Thanks, Camilla.